Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 11th of May. Starting off with Bitstack, which looks as though it's had a little bear trap rebound from below the 200-day moving average around 2.85 pence, and also that last low in March at 2.76. We've got the rising 200-day line, which gives us a bit of hope that this is a sustainable rebound, and also a bounce off the RSI support line from back in December. That should at least allow the shares to have a chance of hitting the last resistance on the way down, 3.75 pence, which we saw towards the end of last month. And obviously we don't want to see an end of day close back below 2.6 pence, the bear trap low from earlier in the week. On to Barron Oil, which became a bit of a hero, I think just last week. Obviously things cooled off after the placing. I think that was at 0.06 pence. We doubled and then we came back, but staying above the 50 and 200-day moving averages, which are currently in a golden cross, and above 0.07, we could have a partial or even full retest of that 0.12 peak that we had just last week. Moving along to a stock which I don't normally cover, but got a thin day and a bit of action here in terms of bullish divergence for best of the best. Which is obviously always tempting fate, especially if you look at the chart. Here we've had a gap to the upside off support, and a gap through the 50-day moving average, which is rising, which is normally a positive sign. The prospects in terms of the upside, probably towards the line of resistance that I'm drawing at the moment, so 520 or so, and that would suggest that we're in a rising trend channel from back in February, and bounced off that. It was also an RSI uptrend line as well from back in January, so we bounced. That's the sort of third bounce off that. Normally the third bounce is the one that comes up with the goods. Above the initial May resistance, and also above today's the top of today's gap at 415, let's call it, looking for 520 over the next month or so. Another stock which has been beaten up and chewed up as well is DeepMatter. Here we've got first hints of a recovery here with the rising volume that we've had in recent days, but also a bullish divergence line. We had a bear trap below the old January support around 0.17 pence. So it's a reasonable rebound that we've got at the moment. While there's no new lows at 0.09, if you can afford that, then we should at least head back up towards the upper 20s, which is basically post-January resistance. But that is certainly a best-case scenario, and we're really relying on that bullish divergence from December to May, providing the momentum for the shares. If you're cautious, maybe you'd wait for an end-of-day close above the 50-day moving average at 0.19, but obviously that would be giving away a lot of the notional upside. Onto a stock which has been a favourite of mine in the past, GS Technologies. Here we've broken that line of resistance, a bit of a fuzzy line of resistance there from October, but we bounced off this bullish divergence line from back in January, and that gives us some hope that the shares will at least head up towards post-March resistance of 1.87, maybe into the low twos. By the end of the end of this month, or maybe the first week of June, something along those lines over the next month or so. And we don't want to see any fresh lows below 1.4 pence ahead of a move towards the low 2 penny area. On to Imedia, which I tweeted out very diligently yesterday, and here we've got a breakout through the old February resistance at 23.6 pence. The longer we stay above that, the greater the chance of a move towards 36 pence at the top of that rising trend channel from July. We've got a bullish divergence line. We had an unfilled gap to the upside. In fact, we've had an bear trap island reversal back in December, which so you don't actually get much better than that in terms of charting reversal signals or formations, and so therefore 36 seems to be a reasonable target for the end of next month, or perhaps even sooner. Stock which is just going from strength to strength at the moment on the fundamental front is i3 Energy, and here we had a little bear trap from below that April support at 26 pence yesterday. Come back and we're back well above that now with the hike in the dividend. Target here has been 35 pence for quite some time, and above 25, looking for 35 pence on i3E over the next 4 to 6 weeks, or hopefully even sooner. Moving along to a stock which I've never covered before and may never cover again, actually. But here we've got IX with a bear trap gap reversal. So the low there back in April, 32 and 3/4 pence, just nudged below that with a hammer candle, which was nice. Two gaps to the upside since then, so that does suggest there might be some momentum here. Probably looking towards the mid-50s, which is basically half the distance of the decline that we had last month. So the mid-50s, while we hold above yesterday's low at 38 pence on an end-of-day close basis. That's the first gap, so that's normally a decent signal that we can hold above the top of a gap, and we've got bullish divergence there as well, quite strong bullish divergence, which explains the two gaps to the upside. Moving on to Serinus, where I think the punters are expecting great things tomorrow from what I read on Twitter, which is not always reliable, but there we are. Here we've got the shares in consolidation mode between around 1.6 and 2.2 pence. Be nice to see a break tomorrow of the resistance line there from August at 2.05, and then maybe over the next month or two, if the results are good, up to 3 pence, hopefully by even the end of next month. We do have a bullish uptrend line in the RSI window, but a little bit fuzzy there to go with the rather fuzzy price action that we've had in the recent past. Covered Sunrise Resources on the gap, the gap higher and the wedge break, and the bullish divergence that the shares have got, the bullish divergence line from March. It'd be nice to see the shares hold above the 50-day moving average at 13.5 and head up towards 0.2 pence or higher over the next 4 to 6 weeks. But still quite well set up with that bear trap gap reversal for Sunrise. Stock of the day, which I believe is on the basis of some appointment to the company, is Trafalgar, which obviously didn't have a very good run up for much of last year, but we bottomed out around 0.35, and the current situation is that we can get an end-of-day close through 0.92, which is basically 1 year resistance. We could be looking towards 2.2 pence over the next couple of months, or the way things are going, hopefully over the next couple of days. But the target there derived from the top of a broadening triangle, which seems to fit the price action of the last year or two. Finishing off with a stock which has been rather quiet of late, but maybe is set for a revival here. We've got ValiRx, higher low, much higher low for May versus back in March. And the more that we can hold above the 50-day moving average, 26 or 27 pence rather, the greater the chance of an initial target here up to 37 pence, which is the top of a triangle from back in January. That's it from me today. More updates tomorrow.